I'm here with Gino.
Hey, danger, coming with them bangers. Tell me where my paper. Still on the same mission, trying to live major. Don't hate me, hate the game. I'm a player. Feeling like Pac. Represent on my block. Try to knock me down, but I come up on top. Yeah, they wanna see me flop. Got a plot, want a lot. I won't stop on my pops. Got so many flows, it's insane. They don't really understand the game. Got a plan and it's plain, I ain't playing. I'm just trying to gain. I wanna get that big bag, need that big racks. Blow up Tic Tac with a blue cheese at. I don't give a fuck about your feedback. Eat that, get back, sit back, watch me spit that kickback. Got so many flows, yeah, they think that I'm insane. Ghetto kids in a lot of pain, all about the bills, ain't shit changed. Danger, coming with them bangers. Tell me where my paper. Still on the same mission, trying to live major. Don't hate me, hate the game, I'm a player. If you a hater, I don't hate you. I'm just really happy that I ain't you. I just wanna thank you. You kept me motivated, so now I motivate you. There's a lot of cake, money on my mind like a banker. Coming through with them bangers, ain't no room for mistakes. Lot of stake, hustle till we get a lot of rooms, lot of stakes. Good kid, but I keep it gangsta shit. All gas, no brakes. Got cash for the case. More cash in the case. More cash in the safe. More cash on the way. Hustling all day. Ay. Danger, coming with them bangers. Tell me where my paper. Still on the same mission, trying to live major. Don't hate me, hate the game. I'm a player.
Danger, coming with the bang. Where my fucking paper.
Said I'm taking big shots, just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. They been trying to get me cheap like a thrift shop, but I told them it's my time, shit the wristwatch. They been talking way before they even doing something. Whoa. If they wanna play, let's get a tip off. Ain't no silver lining, dawg, this some rose gold. Getting new money, I'm a old soul. Yeah, I get it bouncing like a pogo. Whoa. And I'm too cold like Frozone. And my chick elastic, girl. Told them we ain't in the faking, this ain't plastic, girl. Bought a new whip and cash, now my tax is thorough. Way I'm shooting like step, but my pass is bro. The way I'm playing the field, I'm in a league of my own. And now they all in they fields, I got them all on my phone. But dog, I'm hitting the climb, I got no time on the low. Way I'm shooting is messy, the way I'm hitting the goals. I'm taking big shots, just stop. Way I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop, where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. I just left, but you know I'm coming back though. Whoa. And you know I don't play by my rags though. Now go and turn it up to the max, whoa. Send a paper to me now like a fax, whoa. Yeah. Got 2 phones ringing off the hook now. When I'm in the city, I get looks now. I was going bad, but I'm good now. Said I had to go and put my foot down. Told them I'ma get it and go. Nah. Even in the summer, man, they knowing I'm cold. I got a couple checks coming that I made out the flows. Might get a couple more popping if I do it some more. I gotta do it for real. Said I'm back in my bag. All my digits are climbing just like they all on a dash. And they tell me slow down, cause dog, I'm moving too fast. Might go and call me a Tesla, cause dog, I still got a gas. Said I'm taking big shots. Just stop, where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop, where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop, where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop, where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. pissed off. Thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go. Yeah, we winning by a landslide. Never see me coming on my landmine. Yeah, I ain't taking orders in command like, yeah, you about to see me on demand like, you know on demand. If you ain't know, you about to understand. Yeah, I got the team by my side, right hand. Yeah, take it to a string, you ain't seen it like that. Yeah, and it's the dream, and we coming for the bag. Yeah, and we ain't ever going back now. Future expedited, now we on the fast track now. They won't lend a hand, now they see us on the map now. It's time to act out. Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go, yeah, at the top of the class on a roll, ayy, and it's time to run it up, yeah you know, yeah, maxed out, put the pedal to the floor, yeah, on the road, here we go, here we go. Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on the roll, here we go, yeah, at the top of the class on a roll, ayy, and it's time to run it up, yeah you know, yeah, maxed out, put the pedal to the floor, yeah, on the roll, here we go, here we go. Here we go. On a roll, here we go, here we go.
What is going on, everybody? Welcome back to the Frankie Candles live stream. We got FOMC today with our boy Warsh. I keep saying Walsh. But guys, it's going to be an exciting day. Hopefully, we get some volatility here. What do you guys think? If we drop the poll in the chat, what do you think? Are we going to hike it? Are we gonna raise? Are we gonna cut? Or is there no change? The expectation is no change. So typically, if that happens, there won't be much of a move here, but with the new Fed share, I don't know, we might see some crazy volatility. So shout out to the CandleMafia. Welcome in, guys. Thank you for hanging out with us here to do this FOMC watch party. Let's see who we got here in the chat today. We got Gen Z. What is going on? Crypto Billy in the chat says the best candles are Frankie candles. Crypto Billy, I hope you're doing good, brother. It was such a bummer I didn't get to see you at BTC Vegas, but hope you're doing well, bro. And, yeah, shout out to Crypto Billy. Show him some love. The O-est of G's of the CandleMafia, I believe. But shout out to Crypto Billy. Welcome in, brother. We got Darren in the chat. We got Jesse holding it down as our mods. Thank you guys for being here. Shout out to, I thought I saw Darren. Yeah, there's Darren. Darren, can you do me a favor? If we're just going live, can you drop the actual decision? You don't have to super chat it. Just drop it in the chat so I don't have to fumble. If you could, I would love you forever, and I already do. But shout out to H-Bar Moonboy. Welcome in. You have to play up or down in the beginning. Should we just go 100x and we just vote on it and go 100x up or down? We get liquidated pretty quick. But shout out to H-Bar Moonboy. We got Indian Martini in the chat. Welcome in. We got Rudy. What is going on, brother? Theo Rodriguez, Crypto Owl. We got everybody in here today. Everybody wants to see that crazy volatility. Maybe we'll pull up the 1 second chart. I don't know. But first, I want to go over the charts with you guys, show you where the liquidity is sitting. We'll show the key levels that I am looking for to get tapped. And hopefully we come into those zones today and get some action. So don't forget to smash that like button, subscribe to the channel, guys, all that good stuff. Thank you all for tuning in. And always good to be here. Your TA, you do a swell job. Shout out to Bee's Knees. I appreciate you, brother. Welcome in. Darren does things. Yes, Darren does do things. He's always doing things. rocket to the top. Well, we're going to cover it, guys. We'll go over the charts. We'll see what the charts are saying. Sometimes on these big news days, the TA can get stepped on, but I don't know. Historically, over these live streams, it's been pretty accurate. So without further ado, let's go ahead and jump on into the chat. Charts? Let's get into it. Shout out to Darren says, no more purple tie. I was thinking about that. I was talking with some people yesterday about the new Fed chair. I was like, man, it's going to be the first one without Powell. Man, I'm sure he is so happy that he doesn't have to do this anymore. I always said, I feel bad, man. That's somebody's grandpa up there. He's always getting roasted. But yeah, that's the other thing too, guys. Like, what is going to be dovish? What is going to be hawkish for the new Fed chair? It's going to be interesting, guys. It's going to be interesting. We can't just bet on the color of his tie. In honor of Powell, I wore the purple shirt, guys. So, unfortunately, also the color of the downward candles. But anyway, let's jump in here, guys. So, obviously, if you've been watching the live streams and the market updates, kind of just chopping around here in a tight range, which sometimes does mean, right? I always say Bitcoin does not like to take a nap for too long. If you try to wake it up, sometimes she wakes up and gets cranky, and she makes a big move. Hopefully not to the downside. But let me go ahead and I'll cover the lower time frames first here. Well, of course, looking at our bigger volume profile here, guys, I'm actually going to look at it. We'll look at it through this lens right here, right? So obviously we got the big drop through our macro profile into the value area low. We had deviated below. I am still holding my long position from down here on the golden pocket retest. There it is, right? Golden pocket retest. This was also the value area low of our local range. We were long here in the premium Discord, so I am still holding that position in anticipation of a potential continuation up. One of the things that we have been looking at was that 4-hour money flow coming into the green, potentially indicating that uptrend could continue. We'll see if FOMC wants to step on that. 5-hour money flow also coming up with a potential green dot incoming. So still holding that portion of that long position in anticipation of potentially coming deeper into this profile. We'll cover the next two major key levels. We do have some liquidity sitting up here above the point of control. Of course, there is an opportunity to come up there, sweep out the highs for a bigger rejection, or if we are able to reclaim it, we do have our next major level of resistance sitting here at about $71,440. We have a viewpoint here from a local volume profile perspective. So we'll just show that really quickly. This is overall the macro outlook, of course, guys. If we are going to get up here and continue through the larger profile, potentially even targeting the value area high 786 from the top, this does come in between about $75,000 and $77,000, but we're going to have to cover this level to level. There's no guarantee, especially as we sit currently below the point of control of the range here. This is kind of the first major level of resistance. So if we can't get past this wall, obviously it is going to be pretty difficult to see that full rotation of the profile or even just the push up towards our $71,440 level, our daily MPOC sitting there. So yeah, we'll see. Are we going to get hammered down here? This is going to be resistance until proven otherwise. This was our major key level that we were looking at over the past week or so. Kind of just waiting for the bigger levels down below or the bigger levels up above. So yeah, this is the first big wall, and we'll see. Are we going to be able to get through here? We got a little bit of a sweep of local liquidity we had down here for another reclaim of the value area low. So it's kind of like it's a pinch here, right? We are at a major level of resistance. However, it is also going to be the doorway to potentially higher prices once we can reclaim that $68,000 level. I do think we will very likely, maybe even with FOMC, if we want to go ahead and sweep this liquidity and it does not end in a liquidity sweep or an SFP, and we reclaim these levels, guys, there is not a lot above us. We looked at this exact same thing, fast move down. We knew on those market updates talking about the $65,000 level. Once we're able to crack above this, we can see a very fast move into that POC. Fast move down oftentimes leads to a fast move up. And I love drawing these circles because more often than not, they do play out. There's no guarantee you were going to break this level, but we know this is the key level to break in order to see that fast move up, which wound up being very good for the long position. It's going to be the same thing here. I'm actually going to move this level of resistance up because this is the next level, right? We're already kind of inside of the first zone. But once we get above here, I do think we could potentially see two things play out. Either a sweep of the liquidity that we have here, and I've had this marked off on the chart for quite some time. This is going to be that first kind of trap. If we sweep here, we could look for a rejection. But once we get above that, right, it could cause a short squeeze. And again, fast move down could very easily cause a fast move up, targeting that daily MPOC sitting at 71,440. So that's the situation we're dealing with on the charts. Of course, from a money flow perspective on a news day like this, I'm going to take it a little bit with a grain of salt, but medium time frame money flow, still attempting to stay in the green here. 5 hour coming up. 6 hour just crossed over into the green. VWAP curving up. So we'll see what happens. And to the downside, those are the big liquidity levels. To the upside, the big levels to the downside, of course, we've already swept out this liquidity. Let me pull up the liquidation heat map. You guys can see that liquidity was sitting right down here, which is also pretty confluent, right, with the value area low, right? We have the lows here, come sweep out that liquidity. We have now reclaimed that value area low. So very nice little liquidity sweep there, but you can see we also have some liquidity below. And if you guys watched the recent live streams, you will know we do have a major key level the biggest key level I am interested into the downside is going to be this $63,000 zone. If we end up just continuing our downtrend here with lower highs and lower lows, this is the biggest level to watch. This sits between about 63,500 all the way down to about, call it 63K. This is the biggest level of support, in my opinion, if we do want to continue this overall trend to the upside. Once we crack back below here, we'll be losing the trend line. We'll also be accepted into the value area high, which, of course, once we can't get out of that value area high, this would be a pretty decent sign that we are going to continue down lower, potentially at least down to the POC and value area low of the range. And then if we get down there, right, we could start talking about a potential another move down towards below $60,000. But locally, these are the levels I'm going to be watching today. Hopefully we can get some volatility in the market and get this, get a move into some of these liquidity levels and see some price action form here. All right, so that's the situation on the charts here, guys. Looking at the higher time frames just real quick. We just hide those daily MPOCs real quick. Higher time frames, right? Daily red dot printing. This is why I am still open to a move to the downside. I am holding still a portion of my short position from $81,000. I did add a little bit to that position up here as we started to get the rejection in case we do get the lower high here. If we do get that big drop down, right, of course, we have the local support. But one thing on the daily here, guys, we talked about how this daily is kind of isolated. We did see the 4-hour money flow coming into the green, 5-hour money flow coming into the green. You have a little bit of a mixed scenario here, some mixed signals. Medium time frame could indicate the trend is likely to continue to the upside, right? But we cannot sleep on the fact that that daily money flow is still in the red and honestly locally coming out here. So we don't know. Is it going up or down? We don't know. We're just trading the charts here. If we get stopped out of one of the trades, I actually don't really mind, right? I would love the long to play out a little bit more. Just capitalize on that long position. Shorts already got massive profits locked in, so I kind of prefer to get stopped out of that one. I'll make more money. But the with the red dot, right, if we print this red dot on the daily, the one thing I am interested in, right, once that $63,000 level fails, it is going to look very likely that we could print a daily bullish divergence here. And once we get accepted into that local volume profile, we could look for the full fill. And then once we get down there, money flows in the red. There is still a chance that we could put in a lower low here. So either way, up or down, we're going to be making money in the traditional CandleMafia way. Again, if I had a preference here, I'd like to squeeze a little bit more profit out of the long first. But again, I am hedged here. Well, I guess my long is more of a hedge here. But if we do come down, we'll see what happens, right? And then, once the one thing is if we're going to get a strong bounce here, guys, I'd really like to see this level hold. Once we lose that, I think my general bias is going to be eventually to take out those 60K lows, which is not a horrible thing here just because we do have massive support underneath us. We have the weekly MPOC, the weekly horizontal, and most importantly, we have the monthly MPOC and the daily sitting at about $68,000. So if we do put in that lower low, this is going to be a level that I'm interested in. Let's just say we melt through all of this, come down to the value area low. If this doesn't hold, almost certainly we will put in that lower low into a massive level of support, monthly MPOC on that daily confluence. Very, very high time frame support level. And then as we push in there, if we can get that daily bullish divergence, this is going to be a big area I'll be interested in new long positions. So just the quick and dirty there on the charts. I don't want to say I doubt with FOMC happening, but I don't think we're going to break the low today. So we're going to watch those local levels. We'll take it step by step here, and let's see what the Mafia is thinking. You guys saw the poll in the chat. 74%, no change. I probably could have anticipated that outcome. But yeah, so that is going to be the obvious anticipation here, guys, is no change. Hopefully that doesn't mean a hopefully it doesn't mean boring price action, right? Obviously if we get what we expect. Typically, when you're going to get that big move on the news, it's when something is expected, and then the Fed chair gets up there and he's like, "Yeah, we're just going to start cutting rates." If they start cutting rates, it's unexpected. I think you could see a big new move on the news, and then of course, same thing if they cut rates. If they say there's no change and they cut, I think you'll see a lot of volatility to the downside. If there's no change, we might just kind of do the traditional, FOMC. Bing bong, right? Might just be like sweep liquidity, right? You get one of those, classic 4-hour candles. That's big wick, body, big wick, and then price just kind of settles down. That's my least favorite outcome because it's not exciting. But let's see, 80K after the Fed cut. Yeah, that would be nice. Shout out to Darren to Bonesmith. Hey, we got another Darren in the chat. Let's go. Let's see. 62K after the speech. It is easy if we pump during FOMC speech. Look below and vice versa. Shout out to Kodak. Yesterday, you said we were going to look for longs around 63K level. Yes, that level is still 100% valid. Let me just pull that up real quick. This level is still 100% valid. I'm already long from down here, but if I wanted to compound that long, or if I wasn't in a long, maybe I would have been interested in here if I wasn't holding the long. But to be honest, there was not a lot of confluence here. All we had here was the value area low, which is a key level, a little bit of liquidity. And I would be viewing that more as a low time frame scalp. Already gave a nice little pop to the upside. But for me to really look to compound my longs based on my current positioning, I would really prefer to see a push down to 63K. And as you can see here, we do have a high, a low, a lower high, lower low, potential lower high, which did come in at our golden pocket retracement. So we'll see. This does have an opportunity to break back down and continue towards 63K. So this is still 100% valid. I wasn't live yesterday. I didn't put a video out yesterday. I had some important business side stuff I had to take care of, unfortunately. Well, not unfortunately. It's actually exciting. But unfortunately, I wasn't able to go live. But this is all still valid. Key level of support, key level of resistance. The traps in the last market update were obviously the liquidity sitting above and this major level down below. So these are still just the same traps. We'll see. If this, then that. If we come up here, opportunities for the SFP. Come down here. Opportunities for the bounce. Let's see. On the road, so I'm just listening. Let's get it. Shout out to Curtis Neal. Welcome in, brother. Welcome in. I'll try to speak out the prices so you don't have to look at your phone while you're driving. Please don't look at your phone while you're driving. Hang on, let me just check the. Hey, Golden with the super chat. Welcome, Golden. Welcome in. He said, "Who did it? Come on, who did it? Fess up. Which one of you beautiful people gifted me a free membership to my alt account for the best TA channel on the internet? Thank you for spreading the love." Golden got a membership. The man who was gifted, guys, thousands, maybe tens of thousands of memberships. I don't know. Golden has gifted infinite memberships to the Mafia, and finally, he got one back. I would have to assume, bro, it had to have been BTC Bill or someone like that, some of the other big channel gifters. But shout out to Golden. His alt account is now part of the membership. Now his alt account can spam the golden emoji. Welcome in, Golden. Welcome in. I have them enabled, triple checked. Let's go. Half the message I type are not going through. Maybe you switched accounts. I do see you now, Golden. Let's go, baby. Let's go. What do you think, Golden? What do you think? We're pumping or dumping? Let us know. Thank you. I'm traveling too. Shout out to Rudy. Yeah, I'll try to announce so you guys can listen like a podcast. I'll have to use my radio voice. Golden the GOAT. Yeah, absolutely. Shout out to Kodak. Small pump when Warsh speaks, then dump. Yeah, my overall anticipation, guys, when it comes to the price action, for me personally, right, like I said, if I were not already positioned from higher and lower, obviously I would be interested in this little Fibonacci retracement here, golden pocket retracement, obviously a key level of resistance. I do think, right, once we get up here, the key level to break is going to be the 786 and the POC. Once we start getting above here and we don't get a rejection, that is, in my opinion, going to be a high probability, right, that liquidity above is going to get taken. The closer you get to that liquidity, typically the stronger the magnet. And then once you get above that 786, right, if we're going to see the continuation of the downtrend, you have the high, the low, the lower high, the lower low, lower high, lower low. and pulled from the top here, this is still a valid lower high, right? I know it broke this, but it did not break the overall structure here. So this is going to be, I would say, the line in the sand, 786 sitting at about $66,556. Once we start getting above that, flip the POC. If you're going to get this lower high to come in, it's either going to happen at the golden pocket. Whoops. It's either going to happen at the golden pocket or the 786, right? So if this is going to continue to be a lower high, that's the last level to reject from. Once we get above there, flip it into support. I think we go sweep that liquidity. Right now, we're currently rejecting. So we'll see. I don't really have any action to take until we come down here or we come up and see if we can get that liquidity sweep. In my opinion, guys, to be honest, especially on FOMC, it's a very liquidity-favored day. I would not be surprised if we either come up to interact with this liquidity or down here. Hopefully, the liquidity up here, right? Because if we come down here, this brings us into that 63K zone. The liquidity technically brings you down to like 62K. So, if we're going to see some crazy volatility, maybe it's a pump and then you see like, boom, big candles, or we come down and you see, boom, big candles. Only time will tell. And we will be watching the live stream as well, guys. I never know really like how to split this up. I try to cover the charts with you guys, show what I'm looking at, and then we watch the stream. I pull the chart up periodically. Sometimes I feel like a lot of people would just like me to sit on the chart and just narrate the price action live. And then one more thing here, just hyper locally, right? If it does wind up being, not any real big moves, we can watch this kind of volume profile here. I'd actually pull this, just see something here. Yeah, we got the little local volume profile here, so I will mark this out real quick. Whoops. Got the POC value area high, POC value area low. Little deviation below the low, sweep out the liquidity, bullish divergences, back in, fill the rotate to the high. So in this point, we'll see. Lose this POC, might be headed back down to the low. Shout out to Crypto Crimson. Welcome in, brother. I'm short. That's all that matters today. Bring me back to 60K. Then y'all longs can send. Shout out to Crimson. In that case, I hope it dumps for you, brother. Let's listen to what Walsh says. Is it Walsh or Warsh? I think it's Warsh, isn't it? Is it Walsh? Yes, Warsh. I keep saying Walsh too, bro. Shout out to Carlos. Said, nice to see you again, Frankie. Shout out to Carlos. Welcome in. How do you snipe an SFP? Shout out to Crypto Guy. Very simple. Let me see if I could just spot a quick little SFP here. SFPs are very simple. All you're really looking for, right, the traditional candlestick. I have a tutorial on this because sometimes if you just trade it the traditional way, you'll get a really late entry. In that video, I kind of show you how to snipe it at the wick. There's two major ways you could do that with order flow or going down to the lower time frames. But traditionally speaking, you're looking for a wick above the key level. And I also talk in that video how to find the liquidity levels. In this case, you have equal highs here. Above relative equal highs, liquidity resides, right? All you're really trying to figure out is where those stop losses are, right? People may be looking to short the lower high here. Where are their stop losses going to go? Maybe they get in here. Stop losses are going to go above the high. So you have liquidity. You don't have one trade here, right? You have a bunch of trades up here. All that liquidity is sitting above. You push into those shorts, hit those stop losses. Once you get stopped out or liquidated out of a short, it creates market buys, giving you that big wick. So for the SFP, what you're really looking for is, finding those levels, which is important to understand how to find them. Again, check out that tutorial video on the beginner series. But you're looking for the wick above and then the candle wick back below. And then once your next candle confirms, that is the confirmation of your SFP. So there you go. That's all you're doing, right? Wick above, candle closure down below. That is what an SFP looks like in all of its glory. That's a pretty good example of a perfect SFP. So there you go. And with that being said, let me just drop this local range into a folder here so I can bring it back up when we want to look at it. When we pull up the next big liquidity level, we do have a daily MPOC sitting up there as well. This one's already tapped. Right, so what we'll be looking for, you do have the wicks up here. So we'll see. I'll be looking at that MPOC, wick above, get the candle closure down below. We'll see if we can get that little SFP. Thing is coming back to 62K. I mean, that would be the full rotation of that local volume profile. Or not the full rotation, but it would bring us back into that major key level, which, again, I would not hate, guys. I would not hate to come back down here, have the short play out a little bit more, because I did add a little bit to the short position on the way down, took some more profits, then added a little bit to make it a bigger position. So if we pull back down there, that'd be nice. Make a little bit more money on the short, and then look to potentially compound the long position. What time frames do I use when sniping the SFPs? It depends. I like to find the levels, the liquidity, the actual like SFP levels, the levels that I'm looking for the SFP at. I like to find those on the higher time frames, the more significant, like the 1 hour, the 45-minute. You know, usually up there is where I'm looking for those actual zones that I'll be looking for the SFP. And then I also pair that with the liquidation heat map, right? So you could see up here at about 67 up to almost 68K, you can see that liquidity visibly sitting above those highs. So at the end of the day, I guess the real level that you could look for the SFP at would be above this high. But yeah, I talk about that in the video. I show you, like, number one, how to find the liquidity levels, what an SFP is, the theory behind why I like them, why they're high probability, why they're good risk to reward, and then also exactly how to trade them, right? But usually I like to find those liquidity levels. Usually I'm like the 1 hour, 1 hour to 45-minute. You could look at the 4 hour, but I tend to find that the good SFP levels are on like the 1 minute. The 1 hour, the 90-minute, the 45-minute, and then you can look for the SFP on those time frames. But again, sometimes when you find those SFPs, for example, if you're looking for this swing failure pattern, let's say you're just looking to sweep this high. Come on. You're looking to sweep this high. By the time your next 1 hour candle confirms, you've already gotten a push up and a push down. It's not the worst thing in the world, but if you wait for this next candle to confirm, your entry is going to be down here, right? And then your stop loss goes above the wick. But if you watch that video, I show you how to go to the lower time frames and look for very specific confirmations as you're interacting with the level, which can help you get a much better entry a lot closer to the actual SFP level. You could totally trade them traditionally. I just like to really get those sniper entries so I can take a much bigger position size with a tighter stop loss. So many different ways to trade them. Awesome. Thanks, Frankie. No problem. Shout out to Crypto Guy. Appreciate you for being here, brother. Do I use CoinGlass for the heat maps? Yes, that was just CoinGlass that I had up. There's a bunch of places you can look at the liquidation heat maps, but what I just showed was CoinGlass. Will the Fed crash the market? I hope not. I try not to be too decisive on this stuff, guys, because this is obviously, my base case here would be they're expecting no change. If there's no change, you just get like local volatility, right? You'll just get like the, I don't know. I'm not going to say this is an actual FOMC meeting, but like you'll just get like something like this, right? Again, I'm not saying this was an actual FOMC meeting, but it's just like big wake up, big push down, right? And then you just kind of like range around. That's typically what happens when they just do what's expected from the people. And obviously right now, the expectation is no change. So that would be kind of my anticipation right now. But again, if he gets up there and he's like, we're actually going to cut rates, I think you'll see a lot more volatility to the upside. Really anything can happen. That's why these FOMC days are recently they had been pretty lackluster, but oftentimes you can see a lot of crazy volatility. Shout out to Jose, said you can go to the 1 minute and look for a double top rejection. Very similar to the confirmations I look for. I don't look for double tops. I like to look for the bearish divergences. But yeah, very similar kind of setup. Can we look at ETH as well? Yeah, we could take a quick look at ETH. What time we got? 1:43 are we? So we still got a little bit of time here. Let's jump on down to Ethereum. So ETH just kind of still in the same situation that we've looked at. After looking for the breakdown of this local range that we have, this local consolidation, our major key level was sitting down here between the monthly MPOC and the value area low of the range. This has been here forever. We're just still kind of holding on top of this, sitting at the POC. So kind of a similar situation here. Let me pull up the daily MPOCs here. Yeah, so you front ran this daily MPOC. So I would consider this very close to like the $68,000 range for Bitcoin. Let me just make sure we don't have any, bear with me here. There we go. Okay, so you do have some other daily MPOCs. Oh, no, this one's tapped. Just take this off. So this right here would be like the 68K POC. We could take this one off. So you got a couple more MPOCs up here. Let's hide this. So yeah, I would say this right now is the most important level of resistance for Ethereum locally. Very simply put, if we want to try, and again, I'm not saying, guys, that, you know, looking at the money flow here, it's very hard for me to say that we're about to come up here and fill this entire volume profile. I know this is typically a high probability move, but of course we have to take this step by step, right? You have a mini volume profile here, you got another one right here. So the one thing I would say is this is going to be the biggest level of resistance, sitting at about 1905. This is, again, very similar to the $68,000 POC on Bitcoin, right? If Bitcoin's able to get above here, right, we don't get the SFP, I think it could be a fast move up to 71.4. If we get above the POC and daily MPOC on Ethereum, right, it could be somewhat of a fast move up towards this next MPOC pocket sitting between about 2090 and 2184. And let me just, for my own sanity, pull this local profile here, which is also going to be the POC and value area high of that range, right? Then this all makes sense, all right? If you watch the channel, you know how we trade these volume profiles. Once you get above this value area low, reclaim it. Well, the next highest probability move is to see price push in towards that POC. Once we flip the POC, next likely stop for price is going to be the value area high. So whether you want to look at it through the two volume profiles or just look at it through the big volume profile and the key levels, same thing stands true, right? Got to break this level. Once you get above there, next high probability stop is going to be right here between about 2085 and 2180. So let me I'll mark this out. Whoops. All right, so these are going to be the two big resistance levels. And then, you know, if we take out the low, right, Bitcoin decides to come back down and break the lows, right, that's very likely going to be Ethereum sitting at $1,300. And then locally, you know, local support here on Ethereum. I would say that $63,000 level on Bitcoin, right, is going to be probably pretty close to the 1695 on Ethereum. And again, the key here is if we do come back down, looking at our money flow here, right, 4-hour money flow trying to come out, 5-hour money flow coming up, right? So medium time frame, if we want this trend to continue up, of course, you're going to want to hold on top of this value area high. It would enable you to continue an aggressive uptrend. And then once you lose this value area high POC, at that point, you can't get out of here. Biggest, you know, high probability move is going to be to fill that volume profile in full. So I would say this is going to be, mark off this POC, value area high. This is going to be your key levels of support. So we can keep an eye on this on Ethereum as well throughout the meeting. Shout out to Golden. Thank you for the super chat, brother. He said, when the meeting starts and the dude starts talking, can you put your hat backwards and start narrating the price action as though it was a NASCAR event with a 5-second chart on screen? Also, heat map right now. Shout out to Golden. Yes, we'll go extreme. We'll go extreme when the meeting starts. We'll go backwards hat, aerodynamic, ready to go, and we'll even say, drivers, start your engines. Yeah, shout out to Golden. We'll do that, brother. Heat map right now, again, on Bitcoin, $68,000 above, and then underneath us, you know 63.7 down to about 62K. Those are going to be the big levels, and you know, if we sweep these and keep going, right, we'll pull up the higher time frames. Taking a look at the higher time frame heat map on Bitcoin. Really, the 1 month is the highest I like to go here, guys. There we go. So yeah, you can see, right, that $68,000 level, even on the higher time frames. Come on, baby. We had the liquidity up here, swept it, pushed the local liquidity here for a little pullback, but we still got this fat chunk of liquidity above 68K. I would say this is going to be the big liquidity level to look at. And then again, to the downside, you have that 63K zone. So everything lining up with the key levels. So we'll see. We'll see what happens. And I'll try to keep the you know, I never know, right, when it comes to when we're looking at Bitcoin, right? Does it help to have the context of the volume profiles showing, or does that just confuse everybody? Where's my macro profile, right? Does it help, Or would you guys just rather look at the liquidity levels, right? It's a little bit simpler to look at, right? Once we get up here, sweep out the liquidity. I never know. I prefer to look at the volume profiles because of the context. But, of course, with a big profile like this, when we're looking at a 15-minute, right, you can see a flip of the POC and a fill of the value area very, very quickly. On a high time frame, I'm not expecting to flip this and push here today. So that's why we kind of break down the lower time frames. And for what it's worth, pulling up our local range here, we'll see. As we deviate above that profile, come back down, right? That could just be a deviation above that local profile. But looking here locally, come on. Is that PO? Okay, it's starting to lose the POC. Check that 90-minute. This is another kind of bearish setup that could be playing out, minus the volatility, right? Overall on a regular day, not an FOMC day. 90-minute money flow starting to cross into the red. Daily red dot looking to print. This could be a bearish setup for not only a push to the downside for that daily red dot, but that 90-minute could also, money flow indicates the overall trend. High, low, lower high, lower low, lower high, lower low, lower high, lower low. Money flow coming out. Again, I am being a little cautious with these signals right now because of FOMC. You can very easily see volatility to the upside, but on a normal day, right, this would be my anticipation is 90-minute money flow coming out. You got that daily red dot adding insult to injury there, making a high probability continuation to the downside very likely. So we'll see. Maybe FOMC will step on that. BTC horse race, that's typically what people call me, like a horse race announcer or an auctioneer. Let's see. Long or short, I'm going to full port. Shout out to Biz Finance Beacon. Don't full port, man. Don't full port. Don't do it. Yo, Frankie, you the man. Shout out to Lopez. Welcome in, my friend. Welcome in. I appreciate you, brother. Does a bearish divergence go both ways with price action and momentum? I don't know exactly what you mean by that. There are bullish divergences and bearish divergences. So divergences can happen in both directions, but a divergence to the downside is the opposite of a bearish divergence. And just to show this real quick here, guys, I don't know if we're going to get this, but if we do get a lot of volatility to the upside and we come and get the SFP here, could also print a nice little 4-hour bearish divergence, right? And a bearish divergence is simply higher highs on your price action with lower highs on your momentum waves, in which, and on the flip side of that coin, right, for a bullish divergence, you would want to see lower lows on your price action with higher lows on your momentum waves. So divergences can go both ways. And, of course, I do prefer to see that happen into a key level, right? I don't just trade any divergence. I'm going to treat a divergence into a major key level, like down here where we have our long position. Do I still have this on the chart? Right, our long position right now from down here was very simply based on, we had a weekly MPOC. I believe we had a daily horizontal. We also had our value area low of our local range, right? Typically, when it comes to the volume profiles, even for local scalps, I am looking for longs at the lows, shorts at the highs. Does that make sense? So you have lower lows on your price action, higher lows on your momentum waves, and then you get a nice little SFP down here, get back into the range. At that point, fulfill the volume profile is very likely. We see money flow come up. Look for the continuation, right? So, yeah, I do like to obviously see these into key levels. Auctioneer, yo, auctioneer is crazy. Shout out to Taddy Crow. Taddy Crow says, exhausting day, but all good. Yes. Bring Lucy for FOMC. I'm not going to lie, guys. Lucy is for sure in her, she had she was obviously in the very tiny puppy, baby, cute phase. She's entering her rebel era. She's becoming like a hormonal teenager. But we'll come, while Warsh is up there talking, I'll maybe bring her up to say what's up, but I'm going to have to put her back in the crate because she'll literally jump on the desk and try to pull the camera off the tripod. Shout out to Zach. Thank you for the super chat, brother. Said FOMC chaos, candles doing crime. Long from 59.61, right on time. Frankie calls it. Bears lose sight. CandleMafia squeezes the shorts tonight. Let's go. Well, we know Zach's prediction here. Shout out to you, brother. Thank you for the super chat. And long from 59.61, baby. Nice move. Nice move. Smash that like button. Shout out to Panda the Prophet. He said it, not me. Make sure I didn't miss anything here in the chat. Warsh has Epstein file, and Trump knows Warsh Epstein crimes. That's why Trump forced Warsh into the Fed, because Trump can extort Warsh. I mean, listen, not impossible, I guess. Bring Miss Candles for FOMC. She is not here right now, unfortunately. Otherwise, we have that magic hand here trying to push price up. All right, so we got a nice little hold of support here on the POC. 10-minute money flow coming up, 15-minute money flow. Yeah, so I would say lower time frame here, guys. And again, you know, with FOMC, this could all flip in a second. But you do have low time frame money flow coming up with your 4-hour green dot printing, 5-hour green dot looking to print. So I would say medium time frame does not look bad. You just got to be careful. Again, maybe volatility to the upside. You have that daily red dot looming here to potentially sweep out that liquidity for the rejection. But just locally here, as we kind of narrate the live price action, we'll see. If we get that 15-minute money flow crossover, 4-hour green dot printing, we can potentially look for the local trend to continue up. And, of course, until we break out of this value area high, we are going to be stuck inside this profile. It's not until, right, especially, right, once you get a rotation from the high to the low, it's not until you lose that profile where you're looking for the move down. Once you reclaim, you look for the full profile. Once again, we are rejecting here from the high. Like, for instance, here, you go from the high, almost touch the POC. You get a little bounce, but at this point, you're still within the profile. So, although money flow is calling for the move to the upside, I wouldn't really say that is confirmed until we can break out of this profile, because you can see this kind of volatility within the profile. Once you lose the POC, that's where the high probability move to the downside becomes. Shout out to Darren, said they're baiting longs locally, in my opinion. We should get a sweep down a bit if we're going to continue up. We'll see. We'll see what happens. Yeah, I could see a scenario where they kind of bait the longs, right? Because again, if you don't understand how the chart works, which is not the case for Darren. Darren fully understands how the chart works. If we get the push up there, right? Bait them into the liquidity. And again, what happens when you push into liquidity? Oftentimes you see that fast push up, right? But if you don't know the liquidity is sitting here, when you know the liquidity is sitting there, you anticipate this big push up, which you know could end up in a very fast rejection. But if you don't know that, right, you're just seeing a pump, you're thinking, oh my God, bullish, long it. If you don't know the confirmations to look for to potentially expect the move down. The move down. So we do have a potential trap sitting here. Oh my God, it's pumping. Liquidity sweep. Bait the longs. Send it down. Could be the case. I feel FOMO for a long. Shout out to the moon. FOMO is not a strategy. But hey, can't tell you what to do, bro. We're all adults here. We're all adults. You got to do what you think is right. Do I use Heikin-Ashi candles at all, or just normal ones? I talk about this a lot. I used to use Heikin-Ashi candles a lot more often. It's just cleaner to identify the trend. It kind of deletes a lot of the noise. I probably use regular candles now 99% of the time. But it's personal preference, really, because Heikin-Ashi candles show you an average. If you want to know the actual price, you got to use regular candles. So you can see there, right, Heikin-Ashi 65,906. Pull up your regular candles, 65,968. That's because your Heikin-Ashi candles are giving you an average. So this is good, like when looking at trends, right? Like usually on like a higher time frame. Oh, I know a lot of people use this on higher time frames. They'll say, like, you know, once you see 2 or 3 green Heikin-Ashi candles in a row, it could indicate something. The one reason I used to look at Heikin-Ashi candles a lot is because I believe Market Cipher is based off Heikin-Ashi candles. But again, you don't really see much of a difference on Market Cipher, regardless of which ones you're looking at. But you can see here, right, like your Heikin-Ashi candles are just like straight red, right? It's clearly bearish. When you pull up your regular candles, you kind of get, oh my God, green, red, green, red. Just kind of smooths out the trends a little bit. Once in a while, it will toggle back and forth, but I would say at this point, 99% of the time, I'm looking at regular candles. Okay, quick walk with my grandmother's dog again. Shout out to Jessie. Good luck. Hopefully she doesn't pull on the leash. Do I use specific settings for my volume profile inputs? Yes. It's not. I don't change them too much. But yeah, like if you use a default profile, it won't look like this. I use a 70 value area, and then I use a 250 row size. And then in style, you do have to. I don't believe the value area low and value area high are on the profile by default. You have to activate these to actually get those volume profiles, which of course is like the bread and butter of my trading strategy. These are money printers, to be honest. Again, you can't just blindly long lows and blindly short highs. You have to understand context. You have to understand confirmations. But at the end of the day, the thought process with this strategy is if you're looking for longs at the lows, this is identified as cheap price action, right? Or cheap price relative to the recent price action. This is generally where I want to look for longs, right? I'm never looking to long on a breakout. More often than not, I'm looking for shorts back into the volume profile. This is your fair value. Above is expensive, below is cheap. Above is expensive, below is cheap. So you're always going to be better off looking for longs at the value area low, or my favorite setup is to look for the deviations, because at that point, if you're long from here, you get a nice entry. Flip the value area low. Next stop is the POC. Flip the POC back to the high. Same thing on the way down. And the beautiful thing about this is, of course, you're not always going to get the beautiful rotation. But if you don't, with these setups, right, let's say you took a long here at the value area low. Maybe there wasn't an actual confirmation here to take the trade, but let's just pretend you had a nice setup here. You're like, oh, beautiful, long at the value area low. Let's go for the full volume profile rotation. There it is. You can't make it up, baby. You can't make it up. There's the full rotation up, full rotation down. And that's why I say you don't look for the big continuation up until you get out of the profile, right? Because the high probability rotation, as long as you're in the profile, is to go from the low to the high and the high to the low. And there is the value area low tapped. But real quick, if you take a long down here, you might say, well, hey, volume profile didn't rotate in full. POC is always your first take profit. And this is a high probability move, right? So once you hit that POC, it's the strongest magnet within your profile. You could take some profit off the table, move your stop loss to break even for a guaranteed winning trade. If you get the high probability rotation, which will happen more often than not, your trade plays out in full. If you come back down and stop out, you can get stopped out in profit. So there you go. Perfect live example of the volume profile rotations. And you even have the little bearish divergence up there. Shout out to Golden, baby. Let's go. Gifting the 50 Frankie Candles memberships. Come on. Shout out to Golden. Let's go. I appreciate you so much, Golden. Look at all those green names in the chat. Oh, baby. Ooh, baby. Let's go. Shout out to Golden, man. All right. I appreciate you so much, Golden. If you just got a green member, if your name just turned green, guys, head to your emojis and spam that golden emoji. Start that golden waterfall for our boy. Getting a nice bounce from this value area low now. The volatility has begun. Come on, baby. Come on. See here, 4-hour green dot still printing. So again, I will say this. 15-minute money flow, the lower time frame kind of bullish market cipher B setup is not invalidated yet, right? This could still be a higher low. We'll see. All right. Looks like this might be a volatile one, guys. Let's get it. Lloyd said, did I? I would be pumped. Shout out to Lloyd. Unfortunately, your name is still gray. Make sure you have your settings in your YouTube settings. You do have to enable membership gifting. Otherwise, you won't be able to get them. Post him talking. Yeah, we'll watch the live stream once it starts. 65.558 was a previous POC from over a year ago on my chart. Let's go. Just full ported. Let's go. Oh, no. Oh, no. Do not full port. Yeah, no change as expected. So we'll see. Maybe it might just be a local volatility here. See if we have any... Let's check that 30-minute real quick. Red dot printing on the 30-minute. Yeah. My real personal preference here, guys, would be to head down towards 63K. Really, my personal preference, right? Not necessarily from a probability standpoint. Again, FOMC can create crazy volatility. And again, I would be careful, right? You're not just going to take blind longs at the value area low. Let's see here. Now, technically, this would be a bullish divergence. But again, as you guys know, as I say constantly, I do like to see it locally into the level. This is a very sharp, volatile move, right? Really, the divergences I like to see is like a nice little tap, right, into the level. Very similar to what we saw down here into the local value area low, right? For example, this long position that we took, this is the 1 minute. Whoops. I never want to talk about the volume profiles in the way of, again, like I just mentioned, you're never just blindly longing, right? But here, you get a nice low, a nice lower low, and even on the 5 minute here, which is what I entered off of on that particular position, it's not like you have a low here and then a massive drop down. Like, these are the divergences I don't like. I like to see them nice into the level, right? And we have massive confluence here. So when I have a key zone of support, I like to see that divergence locally into the level. Been talking about that a lot recently because we've been getting a lot of sharp divergences. And to be honest, did take a few different long positions on the big drop to the downside here. And a lot of those were on very sharp divergences, and we talked about how I don't really like them, but it's very low risk. I'm short from the high. I get stopped out of 5 positions there and still be profitable on the short. And sure enough, right, the sharp divergences didn't play out. All right, so let's see here. Rejecting out of the value area, 15-minute money flow. Yeah, I mean, at this point, let's pull the full fib here. Invalidation of this continuation of the uptrend, 786. This will be the last level to hold. Once we reject here and can't get back above the 786, very likely crack of this market structure down below this low. In which case, maybe we head down towards 63,000. Shout out to Jose, said, aren't you glad you didn't FOMO into that long position? Frankie said FOMO is not a strategy. Yes, trust me, guys. I speak from experience. FOMO is not a strategy. Patience, guys. Patience is the key in trading. I wouldn't even say it's the biggest key, but it's one of the very, very important things. But we'll see if we can hold that 786. This is literally the line in the sand, right? Because if we're going to hold a high or low, full fib from the low to the high, this is technically an opportunity. I wouldn't say necessarily for a beautiful long position, but if you're looking for the continuation of that structure, this is the level that you need to hold on top of. Once you lose this, higher low is invalidated, and you can look for the bigger drop to the downside. And if we get the continuation of the bounce, the biggest level to flip here would be the value area low. So if you can get the reclaim of this value area low, potentially we could push back up towards the POC. Shout out to Golden. Thank you for the super chat, brother. Said, I don't always trade, but when I do, I always FOMO on FOMC days. Then I cry myself to sleep. Shout out to Golden. Yeah, and it's not that I've never FOMO'd, guys, to be honest, right? Like, I had to learn that lesson the hard way. And it honestly turned me into, at this point in my trading career, more of a anti-FOMO trader, right? I'm now more of a contrarian trader, especially when I trade the volume profiles. If I were to FOMO in on a breakout of the value area high, now I am more likely to fade that move out of the value area high for a move back into the range, right? And like, even here, I would not see a break and look for a short. Where would I look for the short? I would look for the short into the value area high on the green candles. Very traditionally speaking, I'm not telling you to long Bitcoin right now at all, but when I'm just from a theory perspective looking for trades inside the volume profile, when I am at the low or below the low, the only trades I could be looking for is a long position, right? If I'm not already in a short from higher, it is too late for me to short down here, right? The price is already moving, you missed the move, right? On my long position from down here, I did not long after the big push out of the value area, right? I was long on the dump to the downside at a value area low. with confirmation, right? So we'll see. Let's pull up that 1 minute. Value area low is going to be resistance until proven otherwise. See if we can get that flip. So if we want another big, on the 1 minute, if you want this big push up, got to reclaim this value area low. And I recommend, guys, if you are not an experienced scalper, I don't recommend trading crazy volatility like this on a lower time frame. 45-minute money red dot printing. No 1/16 strategy there. Still got some time. 4-hour green dot has unprinted. Wow, how boring would this be, guys? Just stay in this range. Oh, my God, I hope that's not the case. I felt FOMO, but didn't enter the long. That's growth right there. Shout out to the moon. There you go. That's why I always, if you're just starting off trading, you start off on a demo account, right? Or just start off looking at price action. Like, I would take a long here. Draw a line. Put a position tool. And you'll kind of know, if you felt FOMO, it doesn't play out. You're like, all right, that was a good idea. All right, let's see. Back above the value area low. Will she retest and hold as support? Let's see. 5-minute money flow coming out. Didn't sweep this low. Well, let's see. See if we can... big levels I'm interested are down here. And down here. Come on. I would just love this. Come on, baby. FOMC got my account blown up twice. Shout out to Jose. Trump tweet blew up my account a third time. Shout out to Jose. I'm not laughing at you losing money at all. I'm laughing because I know the pain, bro. I know the pain. I am FOMO long 64,880 from the 786. I mean, you're long from a key level. Now, your hope, or I should say, if I were in your position, my hope would be that we could stay inside this value area. Getting the retest. Did have a bunch of shorts. Decent amount of shorts entering in on that little dump to the downside. Get chat back up here. Where'd he go? There we go. Why Scamwick? FOMC, baby. FOMC. That's what I would say. The burn is how you learn. Unfortunately, in trading, for me personally, the burn is how I learned. I always tell people, I touch that hot stove. I'm just stubborn. I kept touching the hot stove and touching the hot stove. I guess I have calloused hands. Eventually, I got burned enough, and I was sick of the same outcome, which was FOMOing, having no idea how to read the charts, and just trading off emotion. Oh, my God, dump to the downside, short. Oh, my God, I'm wrecked. Long. Oh, my God, I'm wrecked. Yeah, don't be greedy. Take your scalp profits quickly, yeah, especially on FOMC. But let's see if we can hold on top of this value area high, or I'm sorry, value area low. No low time frame bull divs, unless you want to count that super wonky 5. Oh, no, the 5-minute bull div didn't even confirm. So, yeah, what was this move? Yeah, 1% move. Shout out, I forgot who said it. Whoever took along for the 786. 1% move. Not a bad scalp there. Did I use order flow to see those shorts? Yes. I just took a peek at XO charts. Saw high volume, high amount of shorts. losing the value area low. Yeah, especially on the high volatility days, right? Like on a traditional day, if I'm on a long a 786 like that, typically I'd like to see it on like a nice SFP or something, or maybe even just like low time frame bull divs into the 786. My trading, I wouldn't not my whole system, but right, like my criteria is key level confirmation, right? Now, of course, you can just trade an aggressive reaction, but you got to be careful with those scalps. If you were to come down here, see some nice bullish confirmation, maybe it's an SFP, maybe it's bullish order flow, whatever it is, that gives you a much better confirmation for a big continuation to the upside. But we'll see here, playing around with that value area low. Will she get back in? Will she push up, or will she reject? Got a 5 minutes here. Just pull this up real quick. Mute the music. I'll just keep this up so I can see when that starts. Straight to zero. Shout out to Bobby. Send it to zero, baby. All right, so what are we thinking? I already got the Fed rate poll in there, or the decision poll. That is now over with. Let's see, 63K or 68K first? I'm going to put a new poll in the chat here. What are we thinking? Let me know what you guys think. Shout out to Always 1982. Says DCA game playing out. Trade in the months, not the minutes. BTC rewards the patient. Can't argue with that. Yo, shout out to Golden. Thank you for the super chat. Said, can you please walk off camera for a few? The price so the price does something. Happens every time. Get Lucy out or something. LOL. Shout out to Golden. Yeah, we did that last FOMC. I was just ducking underneath the desk, and every time I ducked, price would move. They know we're watching, guys. They know Frankie Candles is watching the chart here. Playing with that value area low. Just see something here real quick. Warsh is going to wash us. Oh God, is that going to be the new meme? Warsh washes everybody. Hopefully not. Rip off the Band-Aid and dump it down to 50. Yeah, and of course, guys, my higher time frame bias has not changed. I won't even really cover it. But of course, time will tell. Historically, the weekly money flow. Once the weekly money flow crosses into the red and you get the big dump, this has historically meant every single other cycle that it has been the time to DCA into the market. This is not financial advice. I'm not telling you to buy Bitcoin. I'm just talking about what I've seen in the past and how I've handled the cycles previously. High time frame. Once that money flow crosses red, back here in 2018, right? Money flow crosses red. You get the big dump. Not a bad time to DCA. 2022. Money flow crosses red, big dump, not a bad time to DCA. Sure, you go lower. So, I don't know. That's what I've been looking at. And, it's played out every single time. Doesn't mean it has to play out this time, but, of course, the charts are typically the truth. So, even if the bottom is not in, right, which I very well think it may not be, you don't want to miss the forest for the trees, right? And that's why DCAing is an amazing strategy for your long-term bags, right? Buy a little bit, buy a little bit, buy a little bit, buy a little bit, right? At the end of the day, when Bitcoin's sitting at $150,000 to $200,000, you're not going to care if you're in from 50K or 60K. You're just going to look back and say, well, hey, I bought the bottom accumulation zone. I'll just leave it that simple. And the one thing I will say from a psychological perspective here is that psychologically, right, people, the sentiment is obviously in the dumpster right now, and it just seems that everybody is screaming lower, 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 which, of course, lower could mean this, but I feel like everybody is just calling for, like, massive, massive dumps, which, down to 30K, Not my base case, but there are reasons why that would make sense. The big conflict we have here is the indicators, the TA, the potential bullish signals that we could see print on the chart very soon. They're not here just yet. Things like the weekly bullish divergences. These things have historically called the lows in the past. So the only thing that's different is we have a lot of the cycle, right? 73% drawdown is what a lot of people are expecting for the 4-year cycle to continue to play out. These things are just not in line, right? Back here, you have the technical signals playing out in line with all the timing of the cycle, the percentage drawdown of the previous cycles. This was very simple and easy. Here you have kind of the charts conflicting with the 4-year cycle, so this is a bit of a difficult situation. Shout out to Zach. Thank you for the super chat, brother. Said BTC tripped, the candles cried. Bulls got cooked, hopium died, DXY grins, bonds ignite, shorts eat steak tonight, dump it, baby. Shout out to Zach. Hey, you're giving Wick 589 a run for his money with these poems, bro. Thank you for the super chat, and thank you for the, you're one of our second CandleMafia poets. All right, I got the live stream here. Doesn't look live yet, but we will pull it up in a few minutes. 0 F's given. Always not just a lifestyle, it's a mindset. Shout out to 1982. Yeah, shout out to Kodak. Said, yeah, 30K, 20K, we are far, far from those levels. Yeah, like even some of the on-chain metrics are... Some of the bottom signals that you see on the on-chain metrics are starting to fire or get close to where we've seen the bottoms coming in the past, right? This is typically where the last times that we had seen a lot of those on-chain metrics fire. It just happened to line up with the 70+% corrections, the 1 year from the top, like all the timing, everything from the cycle lined up previously. It's just a little bit difficult, right? Because the 4-year cycle has played out very beautifully in the past, but this time we have potential indications that the bottom could be a lot closer than people realize when the 4-year cycle is just calling for a massive continuation down. I'm always going to be in favor of the charts. That's a personal preference for me. But again, at the end of the day, everybody always calls for lower at the bottom. 8K incoming, 8K incoming. We get nowhere close, right? So one thing I can say is very high probability is the number that everyone is calling for is very unlikely to be the one that's tapped. Everyone calls for 100K here. We get nowhere close. Everyone's calling for 8K here. We get nowhere close. Everyone's calling for 150K here. I mean, I guess you got somewhat close, but still pretty far away. Maybe a lot of people calling for 200K, you get nowhere close. Here, people calling for 30K. Maybe that's not the level that we go to. Not that I would make any decisions off that, but it is something that I think about. We shall call him the washing machine. Oh, my God. Shout out to Indian Martini. Oh, man, I hope not, man. I hope we're not starting the era of, we look back and we're like, oh, that was the era of the washing machine. That was terrible. I hope that's not the case. All right, are we still live here? Just restart this. Not live yet. Not live yet. All right, let's check the poll here. We got 55 to 45. 55% say dump it. 45% say pump it. Nobody said pump it to 68K and then dump it. But yeah, I mean, if I had to say where we were in the cycle, guys, I really do think it's closer to somewhere in here. Calling for 30K would say that we're somewhere up here. It's just a lot of things don't line up, right? This was much more similar to this and played out much more similar to this. It's hard for me to say that there's a high probability we're here expecting this. Not impossible, but I just like to talk about why I look for what I look for. I wonder if he's going to start with good afternoon, my colleagues and I. Shout out to Kodak. Yeah, Kodak, I don't know. Is that like written in the script or is that was that a Jerome Powell staple? I guess we'll find out. I'm a buyer at 51.5 and willing to look stupid for a few months. Yeah, absolutely, man. I mean, listen, I always say this, right? Yeah, at the end of the day, you're not buying the top, right? I've said this so many times in the past. Like, Bitcoin is down 50%, right, from the top. You are not buying the top, right? So when people tell me, like, I'm starting to, like, nibble at Bitcoin here, I don't call you crazy, right? Only time I call people crazy is when they start to nibble at Bitcoin as we're ripping into new all-time highs, right? So, at the end of the day, you're not buying the most expensive Bitcoin ever. You're buying it at a 50% discount. And again, that's why I love DCAing. Especially weighted dollar cost averaging, just buying bigger chunks as you go down and down, because it continues to lower your position entry, right? Going with the majority on this, dump it. All right. BTC capitulation timing from cycle high. 160 from high to the bear low, 2011, 163 days to 410, 2017, 365 days. Mature cycle median, 376 days. Yeah, and I think that's what a lot of people are looking at. They're kind of averaging out the timings that we've seen in the past, which I've done in the past as well. So, that's where people get the October bottom. I don't think you're crazy if you're looking at that at all. I think that's, it's definitely in line with what we've seen in the past. And then, of course, if you do the same thing with the percentages, you wind up with like a 73% correction, and I think that's really where the $30,000 number comes from as well. Begin the new era with a pump. Come on. We did not peak on euphoria. Yeah, that's the other thing too, right? There are reasons why you may not see, legitimate reasons why this bear market may not see that full correction, right? You did not top on massive euphoria. This is shown in not only the alt season or, just the social metrics in general as well. So, my VRVP POC lined up with that old POC on my chart. Lol, boring. Shout out to Golden. It's tough. Everyone's calling for 50K, even lower. Well, people in the space. Garrett Soloway. Shout out to Garrett Soloway and all other YouTubers, but 100% going on the volume profiles. Yeah, that's all I'm doing as well. We have the value area high sitting there in the mid-50s, right? Previous bull market, value area, where is it? All right, value area high sits in confluence with our massive support. Right? Big zone down here, guys. Big zone. But in the same way, right? Once we get accepted into this profile and start losing that 48K POC, the volume profile would start to call for a much bigger drop down towards $36,000 to $30,000. But again, we're not there yet, right? So there's no reason to really look for that until we get below that level, right? The volume profile right now we're not below the value area high, and the highest probability move is 30K. That is not the situation right now. That may become the situation, in which case that big move down could become the higher probability. But until then, you have massive support here. Massive support. With a lot of the indicators, on-chain metrics, bullish divergences forming into that level. I cannot ignore that level. What's going on with this? Let me... All right. Still not live yet. It's in the waiting room. And I think a lot of people have a hard time understanding that two things could be true at the same time, right? It's like same thing up here. Like, oh, they're going to cut rates. It could pump. Like, yeah. At the same time, you have bearish confirmation, right? It could be the same thing at the bottom, right? Like, yes, it is bearish that FTX is collapsing, all that good stuff. But at the same time, you have those bullish confirmations. Again, that's why I try to keep things a lot very simple, right? If you look at every single thing out there, you're always going to find conflicting signals, which makes it very difficult to feel confident in anything. The elevator music is crazy. They really should be playing like death metal for the volatility. All right, we'll see here. Come on, baby. Once he starts talking, they start asking questions. We should see some volatility. All right, I'm going to end this poll because it's covering chat. But most people say dump it. Shout out to Raw said, what is Zach, a poet? Seems it. Shout out to Alexander G. Welcome in. Jose says, if we hit 50K, getting 10% of a Bitcoin for 5K seems like an absolute bargain. Yeah. I mean, again, thinking about it long term, like my long-term plan, right? My long-term investing plan for Bitcoin. I have a portion of Bitcoin. I'm a Bitcoin hodler. I have a portion of my Bitcoin that I'm not going to sell for a very, very long time. I don't try to sell the tops. I don't try to buy the bottoms. I just hold it, right? That's a portion of my, I guess you can call it portfolio, right? Then I have a big portion that I guess you can call my long-term investments where I'm buying the bear market. I'm trying to sell up towards the highs. It's where my entry was down here around $21,000 and my exit on the retracement here around 110-ish. Playing those big swings, right? And then I have my other portion of my portfolio, which is for my active income, my day trading and short-term swing trading portfolio, my leverage trading portfolio, where I could be getting in and out of a trade in 15 minutes, a day, 2 days, taking just multiple trades, trying to build up capital to eventually reinvest, right? What always works for me, BTC cycle lows have always hit the MVRV score under 0.01. I believe that's one of the ones that is not firing just yet. And then after the supply and profit loss cross with a delay. Yeah, the supply and profit and loss is the one that is starting to fire. Not necessarily indicating that the bottom is guaranteed in, but typically we do see it come. You know, I think we're at, I have to look at it, but it is getting into the very close to what we've seen bring up the bottom in the past.
Honored to be back at the Federal Reserve.
All right, let's see here, baby. Come on.
To take up this duty at a time of such consequence. I've been especially heartened by the warm welcome of old friends and new colleagues both. And I've listened closely to my fellow FOMC members. Heard a lot of new ideas, new thinking, and genuine interest in moving the Fed forward. This week's FOMC meeting exemplified the very best of the Fed's traditions: rigorous debate, open-mindedness, commitment to mission, responsibility, and accountability for performance. In this business, they all add up to one thing: getting monetary policy right, or as near to it as we can do. That is our North Star. My colleagues and I are here to serve our legislative remit, which you've heard us say before: price stability and maximum employment. And these objectives guided our business in the meeting just concluded. As you saw a few moments ago, the committee decided to maintain the target range for the Fed funds rate at 3.5% to 3.75% in support of the Fed's dual mandate. The committee also reaffirmed its policy of maintaining ample reserves in the banking system. Economic activity is expanding at a solid pace, despite elevated uncertainty that owes in part to the conflict in the Middle East. Productivity growth and capital investment, both strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little. We recognize that inflation has been running well ahead of the Fed's long-stated inflation goal of 2%. That's been going on for more than 5 years. Persistently high prices are a burden for the American people. But the recent past need not be prologue. I am pleased to report that members of the FOMC are unambiguous and unanimous. This committee will deliver price stability. At any institution, a change in leadership is a natural and timely opportunity to reaffirm its mission, to review current practices, and to consider whether those practices best meet our objectives. My Fed colleagues and I will be working in close collaboration to ask what changes might improve the conduct of monetary policy. On that score, you might have already noticed something, a difference in today's policy statement. It's a bit shorter, a bit simpler, and it dispenses with some older language. That statement just gives you the facts as best we can judge it. Absent also is so-called forward guidance, which we agreed was not well suited to the current policy conjuncture. This afternoon, you also received the usual summary of economic projections. It's been the practice of this committee for participants to submit these projections, and I have encouraged my colleagues to continue to do so. I, however, have refrained from offering any projections of my own consistent with my long-held views on the SEP, at least as currently structured.
Bitcoin standing still right now.
In the median projections, real GDP rises at 2.2% this year, 2.3% next year, and total PC inflation runs at 3.6% this year, 2.3% next year. The unemployment rate stands at about 4.3%. The median participant judges that the appropriate federal funds rate to be at 3.8% at the end of this year and 3.6% at the end of next. Let me turn now to a few words on a key initiative that we're announcing today. I'm appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy. First, Fed communications. Second, the Fed's balance sheet. Third, our use and reliance on existing data sources. Fourth, productivity and jobs in an era of transformation. And last, the Fed's inflation frameworks. These subjects are timely, consequential, and in my view, worthy of a fresh look. My colleagues and I discussed them with energy and purpose over the last couple of days. For each of these independent task forces, I'm enlisting some of the very best minds, both inside and outside the economics profession. They will be supported by subject matter specialists from our superb Fed staff. And they'll have a straightforward charge. Start with first principles. Ask hard questions. Examine current practice. Consider alternatives. And ultimately, propose next steps for policymaker consideration.
Bitcoin just
Since last summer, my colleagues discussed possible improvements in the form and function of Fed communications. This new task force will build on that effort, and I expect propose some well-considered changes, including to the SEP I mentioned a few moments ago. The second task force, the one on balance sheet policy, will review the benefits and risks of the current ample reserves regime and the composition of the Fed's balance sheet. They will assess alternative frameworks for the conduct and operation of monetary policy. The third task force, the one on data, will evaluate new information sources and consider methodological changes to improve data gathering, with the aim of giving policymakers more accurate, relevant, contemporaneous, and perhaps most important, actionable information on the state of our economy. Fourth, the task force on productivity and jobs. It'll survey the pace, the reach, the economic impact of new general purpose technologies, including AI, and explore the implications for the Fed in pursuit of our employment and inflation mandates. The last task force, the one on inflation frameworks. That'll examine the drivers of inflation, first principles, and weigh the full range of ideas for delivering price stability in a changing economy. You'll hear quite a bit more about these task forces and this overall initiative in the coming weeks. Enough for now to make a simple statement. Each task force will serve an objective shared by everyone in the system, shared by everyone around that table that I sat with over the last couple of days. A Federal Reserve that is clear-eyed about its mission, fit for purpose, and focused on the future. And with that, I appreciate your attention. I'm happy to take your questions.
All right. Here we go.
Hi, Chairman Howard Schneider with Reuters. Good to see you again, and welcome back. This is a lot to be putting in motion so fast. what is the timeline
Somebody said, I
you
miss-
have in
I
mind
miss
for
JP.
each of these?
So I think it'll depend on the task force. It also depends on the urgency in which we need clear answers. My expectation, I'm still in the business of recruiting and finalizing them. My expectation is the task forces will begin work in the next couple of weeks, and we'll start to get some more information from them, some more framing of how they see things starting in the fall, and hopefully most, if not all of them, concluding by year end.
And just specifically on
See
the
what that
inflation
15-minute green dot can
framework, you talk about first principles. Does this include a review of the 2% target itself? You've mentioned that things to the right of the decimal point don't matter. Should this be starting from a premise that 2% as a point estimate is too strict?
Let me break that into two pieces. First, on the inflation framework review, their remit is what are the drivers of inflation? What's the Fed's responsibility for inflation? In part, how do we measure inflation? But that'll overlap with my data group. On the 2% inflation objective, that is the Federal Reserve's long-held objective of 2%. You've heard me say before, I tend to focus on the left of the decimal point. Well, the 2 is the left of the decimal point. For now, 0 is to the right. I see no reason until we have reestablished our commitment and ability to deliver on the 2% inflation objective to revisit that. So that'll be outside the scope of what we're taking on.
Colby.
Where's Mark Zuckerberg? He's
Thank you
always
so
here.
much. Colby Smith with the New York Times. You've in the past said that inflation is a choice, and in the policy statement, it includes this pledge to deliver price stability, as you've reiterated today. But looking at the SEP, the bulk of your colleagues expect core PCE to run around 3.3% by year end, and for the 2% inflation target not to be reached until 2028. So I'm curious how patient you think the Fed can afford to be at this juncture in terms of waiting for one-time inflation waves to wash through and for underlying inflation to step down after so many years of inflation running above target, and under what circumstances you would support the Fed taking some action and raising rates.
Sure. So quite a bit there. Let me try to break that into pieces. First,
gonna have white
we have the
hair by the next
capability
meeting.
and commitment to deliver on our price stability objective of 2%. That's exactly what we're going to do. In the Fed's review of its strategy over the last any number of years, in January, the Fed, including the strategy that we're still bound by, the Fed statement says that inflation is primarily determined by monetary policy. You bet it is. I've said for years inflation is a choice. You bet it is. And today I'm announcing that this committee unambiguously and unanimously have decided we are going to deliver on that. The rest of your questions sounded like an encouragement for me to give forward guidance. We've dropped forward guidance. Some along the committee, I think, dropped it, I suspect, from our discussion the last couple of days, because they said at this moment in time, it doesn't feel as though providing forward guidance is right. Others have, I'd say, different views and think as a general proposition, forward guidance isn't the business we should be in. But that'll be taken up by the Task Force on Communications and my policymaker colleagues. We're going to listen hard to what the experts say and make our own decision. But I can't give any forward guidance about what we're going to do next. The good news is we'll be meeting in 6 weeks.
So just following up, I guess, on the current policy settings, then I am curious how restrictive you think things are at the current moment, given the flow of data that we've seen and forecasts that are coming down the pipeline.
Yeah, I've heard characterizations both inside and the Fed about that. I'll give you my own. It's uneven. If I look at the housing markets as one example, Fed policy isn't the single determinant of the state of the housing market. But broadly, I would say Fed policy appears to be somewhat restrictive. I would have a hard time managing to say those words if I were to see what's happening in financial markets. So I'd say it's uneven. That's perhaps a function of different transmission mechanisms of monetary policy, whether monetary policy is coming from our interest rate tool or our balance sheet tool. But the good news, we have a task force on that too, and the balance sheet task force will be looking more at that subject.
Back to the POC.
You've said you don't like forward guidance. You dropped it from the statement this time, but with the dot plot, 9
66.4?
members suggested that they want a rate increase by the end of the year, and the markets have taken that as forward guidance. So what does this mean in terms of how you guide the markets and in terms of what the dot plot's future is?
I'm going to have to give you the same answer I gave to Ms. Smith. We've got a task force for that. I'll give you a little bit more.
Yeah, tons of task
I
force.
reviewed the dot plots, and when I saw the submissions, I noted that all the submissions were coming in with pencils, you know, those kind with the big erasers. That's to say that I think my colleagues around the table, when they submitted their dots, understand the world is changing quite quickly. And they didn't feel bound by them 6 weeks from now or 6 days from now in the event that their circumstances change. I'll note a couple other things. What I heard around the table was, as they submitted their modal forecasts, to be clear, weren't, this was more likely than not. This was more likely than their other scenarios. So I didn't hear tons of conviction. What I heard was the kind of humility that I think we should have. I did not submit a dot. For me, it's not helpful in the conduct of policy. I suspect by year end, as I mentioned in my opening statements, there'll be a review about communications broadly, press conferences, dots, meetings and the like,
Task forces.
transcripts, minutes. This will be part of that. I don't want to prejudge the outcomes there, but I'm pretty open-minded about what they could be. And I was just incredibly impressed over the last couple of days. My colleagues over the last 2 days, and frankly, over the first 3 weeks I've been here, they've been very open about changes. Change isn't easy, change is filled with risk, but our number one goal is to get monetary policy right. The way to get monetary policy right is to deliver on the remit that Congress gave us, to deliver on price stability, and there was no disagreement on any of those points.
At the risk of possibly getting the same answer about task forces, communications, what is your
Colleagues,
feeling
dots,
about
and
these
task
news
forces.
conferences? Are you going to continue one after every meeting? Do you find them useful? What is the future for the way Kevin Warsh will communicate?
Well, this one's probably got another 15 or 20 minutes in it, so I don't want to prejudge the outcome. Press conferences can be a very useful way to communicate with households, businesses, and more broadly, through using the likes of you. I had a great old mentor named George Schultz, and his mantra was press conferences are useful, but when you have one, you want to make sure you have something important to say. Today, I think we had something important to say about our commitment to deliver on price stability, our commitment to rethink practices with an eye of moving the Fed forward, and to give you and the American people a sense that these aren't idle thoughts, these are concrete thoughts, that we're going to seek out the best minds, both the best thinking inside of the Federal Reserve and the best people I know in business and economics and the academy and technology and the rest, to share their views. That's what we're going to be doing here, the pursuit of truth. I think we're going to come up with some new and interesting things. We made some changes today. I expect more changes to come. And some of those might well be worthy of a press conference.
Chris Rugaber.
Speaking in riddles.
Hi, Chris Rugaber at Associated Press. Thanks for taking our questions. Could you give us a sense of how you see inflation
We got a rug.
more in the long term? I know you may not want to comment on the ups and downs, but is this mainly driven by energy prices in the Iran war at this point, or do you have any concerns about underlying inflation pressures in the economy? Thank you.
So I can't do much better than the committee just did, so let me restate it. Inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks that have driven price increases in certain sectors, including energy. The paragraph goes on to say, but to be clear, the Fed will deliver price stability. My own judgment is the committee spent quite a bit of time, not just in 2 days, but over iterations of a couple of weeks. That's what we're prepared to say about inflation, but the commitment to deliver is strong, unanimous, and unambiguous. And that's, I think, an important message. We've missed for 5 years, and we're going to fix that.
Well, great. And then just on the data task force and everything else, I mean, generally speaking, I think people feel the Fed looks at everything already. Certainly that was the sense from before. Is there data that you feel is not given enough weight? I mean, you mentioned the trim to mean in the past, but again, that's well known to certainly most Fed members. So what is that task force looking at, and what might be I mean, I know you don't want to prejudge the outcome, but are there examples of data that you expect might be given more weight? Thank you.
So you're answering my question. So let me say I don't want to prejudge the outcome. I also don't want to say too much about what they're going to do because I still have a phone call or two to make before I've nailed down the people that are doing that. I'm interested in what the outside experts' view is on the subject. I'll say this generally. Most of the data that central bankers and other government officials in the United States consume come with old-fashioned survey methods, a national accounts of what the U.S. economy looks like that looks very little like the U.S. economy in 2026. Survey methods that don't have response rates that we need, asking questions that might have been quite applicable a generation ago that are less applicable now. So even inside of official statistics, I would be open-minded if the task force and our own best thinking had recommendations how those official statistics can be brought up to a standard of our time using new analytic methods. I'd also say this, almost every private company CEO that's running his or her business are doing so with real-time information that isn't subject to much revision, that is telling them what just happened at that very moment. As you know, there are normal, long and variable lags in the conduct of monetary policy. What we're really interested in is what's happening right now. What we're less interested in is echoes of history. And you're hearing from my answer that some of the data that we receive, that we're waiting on, the first Friday after the month, the payroll index or something else, that might be an echo of history that's quite useful on its third revision. We need to take those error bounds down because we have to make hard decisions in real time. I'm really open-minded that there is a lot of new data sources that we can learn from the private sector, from reforms in the official sector, and new analytic techniques that are far more refined than asking a simple question about whether something was core or non-core.
Edward.
Thanks. Welcome, Mr. Chairman. Edward Lawrence with Fox Business. So if you don't give a lot of ongoing forward guidance, won't the markets have more volatility, and shouldn't Americans have more access into what you're thinking going forward?
So I think financial markets perform best when they react to incoming data. I think the financial markets work less efficiently when they ask a question, how will the Federal Reserve react to that incoming information? The more that markets are paying attention to what's happening in the real economy, deciding what's good data and what's less good data, the more financial markets can price what they believe is the most likely and what are the tail risks. Financial market prices are probably the most important source of information to guide central bankers. But when all the financial markets are doing is reflecting back what we've said, then we're taking the most important source of information and we're being blind to it. I'd like us to create a system where those blinders come off, where markets are following data that they efficiently think is reliable, and they'll be watching data, we'll be watching data. They'll come with better information through market prices to us. We can make more informed decisions with ultimately the goal that I said at the outset, deliver on the price stability objective that Congress told us to do and that we've got to get in the business of doing.
Yeah, if I could take you in the meeting a little bit. This is your first meeting. The board members seem fairly hawkish when you listen to, in general, when you listen to what they're saying. Was there any discussion of a rate cut going forward today?
Just like Powell.
There was one proposal
Backwards
on
riddles.
the table.
Boring. Backwards
there was no
riddles.
discussion of any other proposals. The discussion on that proposal, I would say, was quite limited. The group was unanimous and unambiguous on it. It has been the practice of this central bank and others to have a range of alternatives. Today we had one. I thought it furthered the discussion, deepened it. and made it clear what we needed to do and how we needed to deliver. I wouldn't prejudge what happens in the future, but there was only one big subject for us. We took it on. We had a good family fight on it for a couple of days, and we ended up, I think, in a better place.
Claire.
Thanks a lot, Claire Jones, Financial Times. You know, coming to this blind, reading this very nice short statement that I think we've all appreciated in the room, one might wonder why you didn't raise rates today, considering what you're saying here about the risks to US inflation and your mandate. I guess, why not, and what would you need to see in order to get to that place? And secondly, on your task forces, are there any best practices at other central banks that you'd consider looking at? Thank you.
Yeah. I'm glad they're in the practice of giving you two questions, because my answer to your first question was going to be very curt. I've got nothing more to say than the statement itself. And to the point of the question I got before, market reactions to what we say unfiltered, I think is more helpful than having delivered a statement, me then improvising further upon it. Best practices of task forces. This is a subject I've thought some about. I've been on a task force or two in my life.
Task force.
Best practice, find the best minds. Ensure that the task forces have a range of people, both by backgrounds and predispositions, so they too can have a bit of a family fight. Make sure when you establish a task force that the group that's going to be the recipient of the information feels as though they've got some equities in it too. That's why we're looking for, haven't done the final roll call, some of the most significant talent we have in the building and across the reserve banks on each of these, and in some sense seconding them to this group for a period of some number of months, so that the leaders of the task force know what the most analytical central bank in the world thinks about that. They can reflect on it. And a final best practice, we're not outsourcing decisions to anybody. Administrations past and present, reserve banks have chosen a group of 19 people around the table. These will be our decisions. We can agree to some of the recommendations, disagree with others, have a good family fight about it. But what comes from them will, I hope and believe, make the discussion we have internally better, stronger, more of a dialectic, so that we can finally deliver on that price stability objective.
Just a quick follow-up on your markets point. If you look at 2-year yields, they're really suggesting that markets think more tightening is needed. Would that be your read on what the 2-year yield is saying as well?
We were in such a good place. This is why we don't do third questions, I presume. I'm not going to offer any commentary on market reaction over the last 30 or 60 minutes. What we've given markets is a new chapter for the central bank, some fresh thinking. What we've given markets and households and businesses, I think, is a commitment to ask ourselves hard questions such that we can deliver on the promises that we've made before. This is a lot of change for financial markets to digest. I wouldn't be particularly intrigued by how they react in the first several minutes or even first several days. What I think is most important is that financial markets, and at least as important, households and businesses know that this central bank will deliver on price stability.
Brian.
Hi there, Chairman Warsh. Brian Chung with NBC News. Thank you for taking our questions. So when you say that we've dropped forward guidance for the layperson, that might sound like the Fed's going to say less or offer less insight into where their borrowing costs might go.
Shout out to Reacherous.
So for the person that maybe you might run into at the grocery store, where the price tags are rising at a faster pace than their wages at the moment, how would you explain it to them? I don't know if task force might be the answer there, but how would you kind of communicate this era, this chapter of the Fed?
If I told somebody in the milk aisle that I had a task force for that, I think that would be doing a very poor job. So I appreciate it.
This guy's got a task force for everything.
If I saw somebody in the grocery store, what I would say to them is that we cannot have a very significant effect on particular prices. The price of oil in the markets today, or even the price of a dozen eggs, that does not have first-order consequences to what we're doing. But we do have a really important job there, and it's to make sure that those changes in oil or beef or eggs or milk don't broaden in the economy, don't have second and third order effects That's our job. That's our commitment. That's our capability, and we're going to deliver on it.
And then is the Fed's relationship with the Treasury also under review? There was the normal breakfast meetings with the Treasury Secretary. Is that something you intend to continue doing? And have you had conversations with the president since you're swearing in?
So on the president, I don't have anything for you. With respect to the Treasury Secretary, he has been posting pictures of our breakfast, so I don't think I can deny that. The long tradition at the central bank is that the Fed chairman and the Treasury Secretary meet weekly. I think we've pulled off 3 of those so far. I believe he's overseas this week, so this will be the exception to the rule. I think they're very useful discussions. The central bank's objectives and our roles and responsibilities are quite delineated from the fiscal authorities. And in my view, monetary policy is independent in the conduct of what we do. But that doesn't mean we're not interested in what's happening with the fiscal authorities. The way I think about it is this central bank needs to have a wide lens, but a narrow remit. We need to be quite interested in what's happening in the world. I won't be breaking any news here to suggest I'm quite interested in what's happening in the Middle East. That does have some effect on our day job. It doesn't mean it's our responsibility, but I think we're going to keep a wide lens, and my meetings with Secretary Besson to this point have helped widen that aperture. So we're aware of things that could affect our day job, even if it isn't.
Steve?
Just random words.
Steve Leisman, CNBC. Mr. Chair, thank you, Mr. Chairman, thank you for taking my question. You had said in the before you became chairman that you thought productivity was a reason why the Federal Reserve could lower interest rates. Do you still believe that to be the case?
So the committee had a discussion of productivity today. AI came up. The way I thought about it before and socialized with the group is that artificial intelligence, the latest generation of general purpose technology, is perhaps as important a change in the economy and business and households that we've had in my adult lifetime. It is filled with both a huge opportunity and with risks. I take both of those very seriously. You may have heard me say before that AI is shorthand perhaps for American ingenuity. That doesn't mean that it's going to be easy. That certainly doesn't mean it's not going to be disruptive. But over the long term, my conviction, and I heard quite a bit of support for this around the committee today, is the United States is a winner as we go down this. The United States is ultimately going to be better off in that. Now, to bring that back to the conduct of policy, timing, scale, speed, implications for output and employment, it's one of the things we have a task force to do.
If you don't mind, a follow-up from the other side, which is that when you look at the strong job growth that's out there, the elevated inflation, GDP seems to be going pretty good, and the stock market seems to be soaring. Do you look around this economy and see the funds rate being restrictive?
So that's your second question. I'm going to give the same answer that I gave before. I'd say as I think about the conduct of policy, what matters is what's the effect of policy. Not what do we say, but what happens. And the best way I can describe it is it's uneven. I do see some restrictiveness in things like housing. It's hard to use those same words anywhere else. I'll just make one other point. You talked about one of our dual mandates on the employment side. I don't believe that we have a cruel choice. I don't share the view that was expressed a few generations ago that Federal Reserve chairmen show up at a podium like this and say, you got to choose. And you're going to have to decide whether you're willing to tolerate higher inflation to put more people at work. I don't believe in that. What I believe is if we do our job, we can make strong growth, low prices, and strong employment mutually compatible. And so what you heard from the committee today is we've got some work to do on the price stability front.
Nick?
Thank you. Nick Timmeros with Wall Street Journal. Chairman Warsh, you've said repeatedly credibility is earned
There he
by
is.
delivering.
There's Zuckerberg, baby.
If
Come on.
credibility requires delivering, the move would be to tighten or at least to threaten to. Now, you didn't do that today. Why not?
That judgment you expressed was not expressed by any of the 19 people around the table. We'll be meeting in 6 weeks. We'll take up the issue again.
And if I could ask about AI, the build-out is generating enormous demand right now, CapEx, data centers, power. The productivity payoff may be further out. So in your judgment today, is AI adding more to demand or to supply?
It's a good question.
Oh, he doesn't want to answer that one.
At the central bank and an economics profession, what we spend most of our time doing is counting demand. It's easier. We can see it, we can count it, we can check it, we can revise it. What we do, though, is we infer supply. You'll notice in the second paragraph of what one of your colleagues described as a very short statement, we have a sentence on the demand side and a sentence about the same length on the supply side. They're both important. Just because we can count one better than the other doesn't mean we're going to favor one more than the other. With respect to AI and the growth of data centers and infrastructure around it, we're counting the demand side, and it is no doubt showing up in GDP figures. We can be less certain when we infer the timing and extent of the growth in the supply side. It may well be an intuition the supply side is going to expand, but it'll take longer. I just describe it this way. There's a race between supply and demand. Milton Friedman says that the only thing we know about economics is that there's a supply line and a demand line they ultimately cross. When they cross and what are the implications for policy? The good news for you is we have a task force for that.
No way, dude. He's doing that as a joke.
Thanks, Mr. Chairman. It sounded like on the task force on data that you were looking at overhauling or completely overhauling the system of national accounts, the way the government mines the economy. Is that your ambition?
In a word, no. In a few words, much of this data gathering happens in other government agencies to which we owe a tremendous amount of respect, tremendous amount of deference. But if in the course of this we come up with recommendations, which Fed staff have already begun to develop, about things that they could be doing to help inform us as policymakers, we're not going to hesitate. Again, I don't want to try to delineate the four corners of the research of the task force on data, but I do think there will be a review of official statistics.
Stryker, you read my
mind, bro. At least as important a view of bringing the best practices from the private sector and new analytical tools made possible by AI so we can forge these into a fabric that gives us better real-time information. So as I mentioned before, when we're making decisions that we'd say are real contemporaneous data, not data that we call contemporaneous, that's really an echo of history.
Okay, thanks. The other question I wanted to ask is related to the building renovations. Are you considering any changes to the renovations, the projects, just in light of the fact that they became kind of a political football in the last year?
I heard something about that. I don't think I'm breaking any news, but my view, when you show up at a new institution, you should go meet with the Inspector General, just as a matter of good practice. It's a practice that I hope to continue. I've had one meeting with the Inspector General, and he told me what I believe the world knows, which he'll be coming out with a report on the building and the building projects at some point later this summer. And I'll be interested in reading the report. From my perspective, with a forward-looking glance, is there anything that we can be doing or should be doing from this moment until the completion of the project to do what we can to be good stewards of taxpayer money and to make sure that we're delivering on the promises that we made? Some more work to do. You might not be surprised in the first few weeks. I've been somewhat preoccupied on other matters, but I promised it to get to the full breadth of the Fed's tasks in the weeks ahead.
Victoria.
Hi, Victoria Guida with Politico. So I know that you did not submit a forecast, but you are the person who is authorized to speak on behalf of the FOMC. So I'm wondering if you could tell us in the SEP, the increase in the expectations for inflation, is that all because of the Iran war? What was the discussion around the expectations for inflation being higher and also potentially growth being slower?
So my read of what I heard in the room reflected, I must admit, in the SEPs, is half of my colleagues thought the policy rate, given all those developments, should be at this level or lower between now and year end, and the other half thought higher. That 19th voter was me, and I didn't submit one. There's a range of views on the questions of first and second round effects, no resolution or conviction, but we'll be meeting again in 6 weeks.
See what stocks
I think
are
we're going to
doing.
know more then, and I think that my colleagues are very attentive to incoming developments between now and then.
And can I just quick follow up on the SEP? You said that you're still encouraging your fellow committee members to submit forecasts even if you're not doing it. So what do you think is the benefit of them doing it even if you don't?
That's the commitment that the FOMC made, and it's a commitment that I hope we live up to. Commitment we made was to deliver price stability. I expect us to live up to it. By the time we get to the end of this year, as I mentioned, I wouldn't be surprised if there was a new communications framework. There were some changes to the SEP. That's a committee discussion, a robust discussion. I think we'll have it. I believe we're going to come to a better mix of communications to deliver on what we promised, but I wouldn't want to prejudge what those are. But between now and then, I would continue to expect colleagues to submit their SEPs. Some of them, I think, believe that the practice is currently structured is okay, but I heard a lot of interest in real reform, generally about all these topics. You didn't ask it, but I'll answer. It was a pretty gracious couple of days, and it's been a pretty warm few weeks. The institution wants to figure out how we can do better. The institution's going back to first principles, and I'm encouraged that what we've done in the statement, what we're thinking about doing with respect to the SEP, that instinct towards a new chapter is a real one, and by the end of the year, I hope we can put some points on the board, both in form and in substance of delivering.
God. Those dudes they're all trained in like backward speak.
In Bloomberg News. Could you guide us through, please, some of the
Task
principles
force.
that guide your own reaction
Breakfast.
function, and tell us a little bit about kind of conditions that you think when the Fed should respond?
It's going to be a very unsatisfactory answer to the final question. The Federal Reserve has a lot of responsibilities, not just in monetary policy, but in supervision and regulation, consumer affairs and payments. My own view is our credibility comes from delivering on what we're saying we're going to do across everything we do. I've devoted more time in my first 3 weeks to monetary policy than all those things. But the more we deliver on our promises as good supervisors and good regulators, the more benefit we get, the more credibility enhancement we have in monetary policy. When we deliver on our price stability objectives, which we will, the American people will feel as though the hardships that they've been living through, in part because of inflation in the last 5 years, are in the rear view mirror, and that credibility will have dividends across what we do, and the institution will come to press conferences like this, always with an impetus to reform, always with an impetus to do better, but we're going to put some points on the board.
And Mr. Chairman, strong labour data in recent months, how would you sum up the labour market right now? Do you see it as stable and as potentially a source of inflation? Thank you.
Yeah, so the committee, if I were to try to capture how the committee thought about it, the committee thought that the labor markets were stable. There were some people around the committee who thought that it was trending better than that. Trends matter more than data points. What's happening over 3 or 6 months matters more than any one data point, any one data release. And I'd say the jobs data has been moving in a good direction. If I heard one other thing around that subject over the course of the last couple of days, what I heard was that strong productivity-led growth is not something that we fear, but something we embrace. Thank you all very much.
Hard stop. Oh, man. Hard stop. All right, guys, if you just tuned in, I'll let you know what you missed. Committee, task force, dots, breakfast, rear view mirror, points on the board, task force, task forces of task force, committee, dots, breakfast, car door. It's pretty much what he said, guys. Bitcoin, pretty much just pretty much where we left it. Just continued the rejection here, playing with the macro value area low, guys. There's your FOMC wicks. Push to the upside, push to the downside. Liquidity left above 68K. And our 63K level untapped. Both key levels just kind of just bing bong sideways. This is potentially one of the most lackluster FOMCs. Now, it does not mean, oftentimes, guys, right after the meeting is when you start to see the volatility come in. But yeah, not too much crazy stuff. It was interesting to hear a new Fed chair's word salad. You guys have me cracking up in the chat, man. Someone said I have my mom acts as my task force when she makes me dinner. But to be honest, guys, from a chart perspective here, really not pretty much a nothing burger, which again was my original thought process, right? It didn't come up with any kind of shocking insight, at least on the decision, right? Which oftentimes gives us just a little bit of volatility, and we just kind of wiggle sideways. From a chart perspective, I would say the key levels remain exactly the same. $68,000 liquidity, $63,000 golden pocket value area high, a weekly MPOC. Biggest level of interest, 68K, biggest liquidity level above. With money flow coming out here on the 90 and 80 minute and the incoming daily red dot, I would say that is your case for the push to the downside. And then if we do make it down to 63K, that will be where I will reassess and see if I want to compound my long position, look for a potential bounce. And if we get the push to the upside, again, this is really the only area of interest. I am going to be looking for a short because I am already holding from higher. But yeah, what did you guys think? What did you think? Shout out to Mark, said, hello, Frankie. How can I do my charts like you have it? I'm a new trader about a month, and it's too hard and too interesting when I'm watching you. Shout out to Mark. Dude, check out the beginner series on the YouTube channel. I don't know, there's like over 10 videos in there, totally free, and it'll get you up to speed on exactly what I look at, all the tools that I use, and it'll get you up to speed with what we look at here on the live streams. Shout out to Crypto Guy. Thank you for the super chat. Said, go power task force. Go power task force. The power of task force compels you. Be gone, demon. Shout out to Crypto Guy. Just typical FOMC word vomit, guys. I am not a macro economist. I just look at the charts, and I personally see this playing out just like every other FOMC live stream that we've watched with Mr. Powell. Some people say, and I missed JP, which is hilarious because everybody hates him. It's like, I kind of missed that guy now. Task Force Halloween costume this year. Shout out to Crypto Guy. That's not a bad idea. That's not a bad idea. Shout out to Saba, said, Frankie, can you tell us when we can expect to be interested in longs at 63K? Well, I would say from a timing perspective, when we push into the level. Now, of course, whether I take that trade or not is going to be dependent on whether we see the confirmations, as we get down here. Again, I always say trading is a game of trapping, not a game of hunting. The if this, then that is, again, I am holding my shorts from higher, holding my longs from down here, so I'm just kind of chilling. If we get the push into 68K, I will very likely take some more profit on the long position. If we get the move down to 63K, I will take profits on the short. And then once we get down to 63K, I will look at the price action and money flow, which, to be honest, if we get down there right now, guys, my anticipation, if we push down there maybe later today or tomorrow, we're going to have the 90-minute money flow crossing into the red with the daily red dot, which could very well call for a continuation of the downtrend. But this is 100% going to be the big level to hold. Very simply put, it is a golden pocket retracement. definitely a place you could be looking for the higher low to come in. And the medium time frames could be calling for that. 4-hour money flow technically still in the green, although it is starting to leak out. 5-hour money flow in the green, 6-hour money flow in the green. So I am interested in longs there. Now, once we get down there, if that 4-hour money flow is leaking out and we got that 90-minute crossing into the red with the daily red dot, really the thing to look for is for this to hold. Once we lose it, we are accepted inside the profile. Very high probability of rotation back down to the lows, at least the POC, but very likely down to the lows at about $61,000. Once we get down there, we'll identify if it's going to be, at that point, this would be kind of the last place to bounce, in my opinion. But once we get down there, just like when we talked about if we got back down to this profile low, once we get down there, could we get a bounce? Sure, but my anticipation would have to be to come down and take out the 60K lows. It's going to be similar here. If we get down there, I would have to say money flow is still going to be on the red and on the daily, right? At that point, I am probably going to be expecting to take out those lows at 60K. So biggest areas of interest, to the downside, $63,000. I won't know if I'm actually going to take that trade until I'm able to look at what the price action is telling us when we get down there. In which case, I'll stop out of my short, or I'll stop out of my long in profit, and then hopefully the short can continue to pay us out down to 50K. If I see the signs that we're looking for in the Discord, I will go ahead and compound my long, still take some profits on the short, and then I'll just hold that long, and hopefully we can get inside this profile. But we are just in kind of a locally a tight consolidation. We're losing the macro value area low. Money flow is coming out here on the lower time frames. So again, that does indicate, like we said in the beginning of the stream, high, low, lower high, lower low, lower high, lower low. Push into the golden pocket. Very possible for that to be a lower high, for a lower low. In which case, we are just still on the journey down there to 63K, which is the level we looked at on Monday. So kind of a nothing burger as far as the price action today. Shout out to... Man, I never know how to say this name. Shout out to 254, said, show your cute Lucy. All right, I'll bring Lucy up on camera, guys. But again, if you watch the market updates here, there's the break. About to break that low. There it is. Oh, no, not quite. Come on. Come on. Come on. Go ahead. Boom. All right. She's repelling. Go. All right. Well, we'll leave that line there. Shout out to Golden, said made 33K today, so guess what time it is? Oh, God. Oh, God. There it is. Shout out to Golden. Shout out to Golden, giving to the 50 Frankie Candles memberships. Here come the green names, baby. Here come the green names. Let's go. Thank you so much, Golden. Were you short? Did you long? What did you do? Let us know. Shout out to Golden. Let's go. Make sure you have your settings on YouTube allowing you to accept gifted memberships. Spam those golden emojis in the chat. The GOAT has gifted the Mafia with those memberships. I appreciate you so much, Golden. Nice trade. I don't know if it was a long, if it was a short, or what it was, but I appreciate you so much, and I know the Mafia does as well. But right now, guys, we will see. I will check back in with you tomorrow. Watch the, again, 90-minute money flow. Crossing into the red, we'll see if we can get the continuation of the downtrend and finally come into that 63K zone. Biggest level to watch to the downside, and if we get some kind of push to the upside, of course, the biggest level remains that $68,000 liquidity. Hopefully we can break out here or break down in some case, or in some form or fashion, rather. We will see what happens here, but kind of a boring FOMC day, unfortunately. Golden was schlong. He's just shorting it and longing at the same time, baby. But yeah, if anything crazy happens, guys, I don't know. Maybe I'll go live later if we get like a big move or something. But I will check back in with you tomorrow. And thank you guys for hanging out with us here for the FOMC watch party and our first little introduction to Warsh. Hopefully he doesn't become the washing machine. Smash that like button on your way out. Drop a golden emoji for Golden. Gift in those 50 Frankie Candles memberships. I appreciate every single one of you guys for being here. Shout out to Golden. Shout out to Benny. Shout out to Saba, Rich, Chemdog. Yo, shout out to Chemdog. Welcome in. And shout out to Way Too Much Pressure. And last but not least, shout out to Rudy. I appreciate every single one of you. I'll see you tomorrow. That's all I got. Hasta pasta. Frankie Candles out. Bing bong.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go. Yeah, we winning by a landslide. Never see me coming on my landmine. Yeah, I ain't taking orders in command like, yeah, you about to see me on demand like, you know on demand. If you ain't know, you about to understand. Yeah, I got the team by my side, right hand. Yeah, take it to a string, you ain't seen it like that. Yeah, and it's the dream, and we coming for the bag. Yeah, and we ain't never going back now. Future expedited, now we on the fast track now. They won't lend a hand, now they see us on the map now. It's time to act out. Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, hey, on the road, here we go, yeah. At the top of the class on a roll, hey, and it's time to run it up, yeah you know, yeah. Maxed out, put the pedal to the floor, yeah. On the road, here we go, here we go. Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, hey, on the road.
She's such a big girl now, guys. Look at this moose. She's a moose. Say hi to the mafia. Say hi to the mafia, Luce. Go ahead. Say hi. She's like, get off me. Look. Oh, who's that? That's the CandleMafia. Good girl. Lucy loves you guys. I'll see you tomorrow. Hasta pasta. Lucy's got to poop. Frankie Candles out. Bing bong.